Hi friends, Simon here from InformedTrades.com. Today is Tuesday, August 12th, 2014. Time for our daily Forex chart review. Basically in these sessions each day I share the trades I'm placing, adjustments to existing positions that I have on in the markets, all as a part of helping traders learn. These are live trades on a real account. You can see my whole trading track record over on my blog on InformedTrades.com. Also on Informed Trades, there's a huge archive of learning material. Check out the education section. If any of this information I'm presenting is unfamiliar to you, you want to study about other markets, other styles of trading, a lot of information on Informed Trades. Check it out. Let's get started with a look at the charts. Okay, we'll start with gold. So nice update for gold, which was, there's always that dichotomy of you want to buy low, although when you're in a position, when it goes up, that's nice to see. So I had a little bit of that yesterday. Gold stocks as well rallied, which was fun for me in the regard that I have this. Of course, I'm still looking to accumulate more, so even if it declines, that's a buying opportunity I could be interested in. It looks like today we have a good chance of closing above the 200 exponential moving average, which is always key. The 200 exponential moving average is at 1310.55. Right now we are at 1314. Our resistance is going to be 1327, or excuse me, 1330, right about there. And that's, I think, a key level. Also, this level here, 1339. So basically, 1330 is going to be a key level to watch. 1340, and then if we can get past that. Well, there is something at 1350 here, but 1380. I do think we can start to move a little bit quickly if we can really break out of this range. Now, we did have a new level here, new barrier established here at 1340. However, let's see. For now, the main thing to watch, I think, is if we're going to close above the 200 exponential moving average, which is right here, 1310. On the bearish side, I think we still have support first at the 50 simple moving average of 1298, but also right here 1280, a very important level. As we've discussed in some of these videos, I do think that the bottom is in. I think what we saw here, this dip here in late July, July 30th, I think that's going to be the low, and I think we might be ready to finally make that move. I know I've said this before and a bit incorrect, but I think now, at least I'm looking at it, the way I'm looking at it is now we're going to be ready to make a move, another run up to perhaps the all-time highs. So something to think about. That's the way I see it. A lot of cycle analysts were expecting the low in July, calling the low in July, and I think the fact that we have a strong double bottom established at 1180 here. And we haven't revisited that. I think we have enough of an uptrend here, pattern of higher lows in place that we might be ready to take off. Okay, so that's gold. Going on to Bitcoin. Fell a little bit. We are now back at support, 567, 200 exponential moving averages here. I can see this being an interesting level to buy at. However, we do have this downward sloping trend line, right? This pattern of lower highs in place. Personally, I want to see the trend go up. At the bare minimum, I want to see the market clear this level. So we have price and time. So let's say if we can here, if we're at 567 in September 23rd, so about 6 weeks from now, then this trend line will sort of be invalidated, or the trend line will be so low, and if we're above that trend line, if we're right here, 567 or so in late September, then I think you may have a case for going long. However, at this point, it still seems to me like the trend is pretty bearish. With that said, we are at a major support level, so short-term traders may find it interesting to buy here, and maybe we'll test the trend line up here. Maybe we'll test, there's a resistance level you could argue is at 597. So those are some interesting opportunities. I got long at 522, so my position is currently in the money. However, I'm willing to risk everything I put in. It's a very small position. I'm looking for a 10 times return, so I'm not really watching this too closely. I like to call it an educated lottery ticket, slightly educated. We'll see. It'll seem more educated if it works out well. We'll see. But either way, this is a small position for me. I just think it's a interesting speculative opportunity. I saw a good time to enter, so that's sort of the way I'm looking at it. Okay, now on to the Forex trades. Euro Kiwi. Okay, so this trade I have on is basically at break even. You can see I entered at this black line. We had a big spike up, which is a little scary, a little closer to my stop than I would prefer. However, we're back down here at basically where I entered. So this is also, I had speculated that this candle here, the August 6th, we had a spike here, that this high was the bearish checkmate. We are now higher than that. So part of me thinks I should close this trade out, but I'm not going to. And the main reason is, one, I don't want to tamper too much, but I'm also seeing, I put on a short order on Euro Australian dollar today, which we'll get to in a second, but I am seeing quite a bit of signs of weakness in the euro. So I thought, you know, even though we did make a new high here and we did sort of invalidate the idea that this August 6th candle was a bearish checkmate, we are seeing enough signs of euro weakness that we may be ready to head back down. And this is still an inverted hammer at support, so, or at a resistance level, excuse me. So I think that's a sign of bearishness as well. So basically, Euro Kiwi, just watching that, not really doing anything there. The position's at break even. Let's see what happens. My target profit is still all the way down here, 54.03. Resistance, or my stop loss is at 59.21. Okay, dollar Singapore. It looks like this position has left without me. The order is still on. You know, I'm set to go short here at 25.32. I might cancel it today. I think I probably will. We'll see. But either way, the order is still on. Doesn't look like it's going to get filled. It's 30 pips away, which in dollar Singapore terms is is quite a bit. This pair moves very little, very slowly. So that's, I think, one lesson to learn or something to think about here is when you have a beautiful long wick, often you don't get a pullback. So that may be a good time to think about using a market order, something that I'm definitely thinking about doing when I see an order like this going forward. In general, I think waiting for the pullback, I found that to be much, much better. But there are some exceptions, and one exception might be when you see a really nice long wick like this, sometimes the market just goes and it's not going to make another pullback into that wick. Kiwi yen, this order just got filled. I'm long Kiwi yen, and I'm long at 86.36, 86.35 actually. No, 86.30, 86.30. Slightly out of the money now. However, we have this, and I think this is a bullish checkmate here. This long wick here, so long as that low is not breached, and we have the 200 exponential moving average here, I think what we're seeing is the market is really respecting this support level. And I think we may have something similar to what we saw here in early June. A few candles, you know, accumulation pattern. Excuse me. 1, 2, 3, 4, 5 candles here in a fairly tight range at a support level, and then the market took off. And I think we may have something similar here. Now we have 1, 2, 3. You might argue 4 here. But we'll see if we can get a couple more candles here. And if this paves the way, if this is accumulation going on, this paves the way for a move to 89.65 on Kiwi yen. So that's sort of where my position stands. Not really moving or doing anything here. My stop is at 85.45. I entered at 86.30. So 85 pips away is from where I entered. Target profit is 89.65. Now the new order I added today is Euro Australian dollar. Now this order has not yet gotten filled. I am short at 44.38. My stop is at 44.98. My target profit is at 42.18. I'm risking 60 pips to gain 220. That gives me a reward risk of about 3.67. So what's happening here? Clear downtrend, right? You can just visually see this going back to, what's this candle here? So January 24th. Since then, clear downtrend. Right? And I can actually delete this. Let me actually draw that trend line so we have it as a frame of reference. Okay, so you could argue that we've broken the trend line, actually, that we're above it. However, I don't really think that's the case. I think we're seeing, you know, a pattern of higher. There we go. That's another way of looking at it. 1, 2, 3 times now tested. So this trend line is confirmed from that perspective. But more importantly, even outside the trend line, we just have a pattern of lower highs, right? This low is higher than this one. This low is higher, or low. This high, I always get this confused. Pattern of lower highs. So this high or this high is lower than the previous one. This high is lower. This high is lower. This high here lower. Now this high here is lower here. So a pattern of lower highs related to that price is below the 50-simple moving average and the 200 exponential moving average, and we have this trend line which is now confirmed. 3 touches. So all the signs we're looking for of a clear downtrend in Euro-Aussie. At the same time, if we look at the recent swing high to swing low, we've completed a 61.8% pullback, key Fibonacci number there. At that same level is a resistance level that was sort of established here in July 8th, right around there, and also here a little bit, August 1st. So kind of not a hugely significant level, but I think it's worth plotting and considering a little bit. We also have the 50-simple moving average here, so 61.8% retracement, a resistance level of some sort, 50-simple moving average, and some reversal candlesticks. So what I need here is a pullback. Right now priced at 44.05, so I need 33 pip pullback. A little more feasible on Euro-Aussie. I think there's a reasonable chance this order might get filled. And that's sort of about it. Then targeting the recent lows here. I could actually target a little bit lower. But I thought this is a safe target. It still gives me a reward risk of over 3. And that's about it. The stop is at 44.98, which is above the 50-simple moving average, the trend line, and the 61.8 Fibonacci retracement. So I think that stop gives me enough room as well. That's about it for my trading and for my trades that I put on today. Any questions you have, anything you want to add, join us at informedtrades.com. These trades are also documented on my blog on Informed Trades. So any questions, or if you want to read the text, you can check it out there. Best of luck in your trading, and we'll see you tomorrow. Take care.